Q4FY25 post-results earnings conference call of Vardhman Textiles Limited, hosted by Barclays.
Retail sales during the festive season of Christmas and New Year. As a result, import numbers in Jan and Feb were quite good for US, UK and EU markets. So we had a very good quarter four. In fact, this has been one of the best quarters that we have ever had. We ran on full capacity and we also had a good financial year. Adding to what Mr. Neeraj Jain had said on US tariffs, some of our US-based customers are referring to this situation as short-term pain for long-term gain, and we share the same optimism. So as a response, we are actively engaging with customers to understand what their evolving needs are, and we are positioning ourselves as a strategic and reliable partner. Our proactive approach combined with India's subsequent tariff advantage, places us in a strong position to not only navigate the current disruption, but also to achieve sustainable growth over the next quarters. As far as capacity expansion goes, by the end of our current calendar year, 2025, our production capacity will increase by 38%. So this expansion will enable us to shift to other products, including synthetics, so increase our product basket, and also reduce the sale of grey fabrics. So we will be converting our grey fabric proportion to dyed processed fabric. We have seen strong demand from both existing and new customers, which is encouraging. While the fear of US market slowdown could potentially impact short-term demand, but we're committed to utilizing this expanded capacity immediately. Our aim is to fully absorb this capacity enhancement and optimize our production by fiscal year 2028. We are confident that with strategic planning, agility, and the right customer engagement, we will maximize this capacity expansion and drive growth.
Hello, Roshan?
Hello? Shruti, can we open the line for Q&A?
Yes, sir, sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rajesh Jain from RK. Please proceed.
Hello, sir. Good afternoon. Can you tell me, why is there a sharp jump in other income and other expenses in this quarter?
The other income increased sale of some land at one of our plants, which is about 26 crores of rupees. Other than, I think it's all normal.
Sorry, other than that?
Other than that is all normal. And the remaining is, we do mark to market on the dollar rupee also. So whatever is the foreign exchange gain, that's also gets captured into other income technically as per the accounting standard.
Okay. And why is there a sharp jump in the other expenses? What does that comprise of?
No, that's general because we have huge amount of modernization going on in all the factories. So that's all related with the repair, maintenance, and the capability building expense.
Okay. So, going forward, this will be the trajectory of the other expenses going forward also in the next few quarters?
No, it will come down for sure. I think most of the modernization are getting completed in first quarter itself. After that, it would normalize.
Okay, sir. And sir, apart from, which are the countries to which you export? Can you give a country-wise bifurcation in terms of percentage of your revenue? Country-wise?
That keeps changing, but most of I can just give you an idea. I think as a country, whatever yarn we export, 50% goes to Bangladesh, and remaining goes to most of the Asian countries or the Central America. Maybe some part of it goes to Mexico and so on. And this is the trend for the country. Our trend is almost in line with the country exports. That is true even for the fabric also.
Okay. So is the Bangladesh exports seeing any continued impact because of the stand that Bangladesh has taken?
No, as of now, no, but it's only the serviceability will be a little poor because we'll have to ship it through the water route only. So maybe the number of days to reach the product will increase somewhat in some of the products. For Vardhman, let's say 70% of products were already going by the ship. So I think 20-30% will have some impact on the serviceability. So cost-wise, it may not have an impact.
Okay, sir. And sir, just can you provide any update on your foray into technical fibers? How is the capacity expansion going on that front?
Sagarika, can you share?
Yes. So the progress is as planned, as anticipated, and we should be operational in quarter 3.
Okay. Okay, fine. Thank you.
Thank you. The next question is from the line of Avinash Chandra from SMIFS. Please proceed.
Thank you for taking my question and congratulations management on good PAT performance. Sir, first thing, in the historical, if I look at the number of EBITDA margin and textile EBIT which you report, most of the time, rather all the time, textile EBIT was lower than the overall EBITDA, kind of 1.5-2% difference. But this is the first time our EBITDA margin is 11.4, whereas textile EBIT is 12.5. So, and I understand this is due to unallocated cost and all. So could you describe what are the huge unallocated cost which is there in the number which is not related to textile business?
No, this is all our business is textiles only. There is hardly anything other than that.
So sir, then in that sense, EBITDA margin should be higher than the EBIT margin, correct? If you look at your number, your textile EBIT margin is 12.5%, which is reported, and reported EBITDA margin is 11.4%. And historically, the whole trend was 1.5-2% higher EBITDA margin than the textile EBIT. This is the first time it is a reverse.
Sorry, I'll come back to your question in a little while. Let me just look at. In the meantime, can we move forward?
Sure, sir. The second question, you have already talked about in detail the problem the sector is facing, rather than uncertainty and everything. In a few of the other calls, also many management highlighted that due to this lower international cotton prices, even for some of the spinners, business is not viable. So did we reach to that situation even in India that a lot of small players are not able to manage any EBITDA margin?
Can you repeat your question?
So, sir, in the start, sir already talked about that international cotton prices is lower, and that is making an issue as far as our competitiveness against other countries. So, has it started impacting our EBITDA margin already compared to the historical? Because our EBITDA margin is far lower than the historical. That's where my question is.
No, there are two issues. Definitely, as of now, since our raw material expenses are higher, our EBITDA margin surely is lower, and it is impacting all the Indian players. Two, historic margins on EBITDA margins have always been in the range of about 17, 18, 19%. But if you look at the change of base of raw material in last 3-4 years, the Indian cotton used to be about 34,000-35,000 rupees a candy 4 years back. Today, the base has become 55,000. So the raw material cost has increased by 70% in this period. Whatever is the raw material cost, to that extent, yarn prices have increased. But if you look at percentage of EBITDA to the sales, that's not grown by 70%, 60%. So whatever increase in the raw material prices have happened, our EBITDA per se may be same, but definitely in terms of percentage will never be comparable unless the margins improve significantly.
Sure, sir. A few companies have shown some expansion in EBITDA quarter-on-quarter, year-on-year. That's what.
Last quarter, YOY quarter. Is it so? It should not be because now, earlier we were running at 90% capacity, now we are running at 100% capacity. So volume-wise, it should not be less than that.
It may not be the case. There's also other factors like change in the product mix. So, if the product mix changes, then the price will be different. So the revenue also is different.
So the volume should not be less than the.
Hello, sir. Sorry to interrupt. We may request you to return to the question queue for the follow-up questions, as there are several participants waiting for their turn.
Okay.
Thank you. The next question. Thank you. The next question is from Prerna Junjunwala from Elara Capital.
So, of course, there's some improvement happened, but at the same time, it's not enough. And if you look at the capacity utilization country as a whole, there seems definitely almost 15 to 18% capacity has stopped in this period, last 2 years, because of the lower margins. So, of course, though there has been some respite in this period, because when the cotton season started, at that stage, we were buying cotton at about 78, 79 US cents in India, but it slowly has increased to now 81, 82 US cents. And the May of future has been coming down steadily, 67, 68 US cents only. So, Indian spread is not more than 70 cents as of now.
Okay. So what is leading to margin improvement for us? Is it improvement in fabric margins, or is it improvement in...
Yeah, for Vardhman, the major improvement is coming from the fabric margin. Though there's an improvement in the yarn also in this quarter, but I think substantial increases on account of the fabric.
Okay. And do we see that there is further potential of improvement in margins given the uncertainty and the challenges at the global economic level, or given the uncertainty, we would stay away from giving any comment on that?
No, I think it's good. Very difficult or if anyone guess what will happen, but as I mentioned earlier also, considering even if the duties are put in, India surely looks like would be one of the countries with the lowest duties on it. So, though 1 or 2 months uncertainty could be there, but if we are at the lower end of the duty amongst other comparative countries, this will be an opportunity for the Indian textile mills, be it spinning, be it fabric, be it garmenting.
Okay. And so the second question is on Bangladesh, exports to Bangladesh. given that land route is now closed by Bangladesh, could you help us understand the impact of it in terms of the cost increase that we'll have to incur to supply there?
So, as I mentioned earlier also, in terms of cost, there's not much of a difference whether material goes through the road way or it goes through the ship. So cost is not really very expensive, but more impact is on the serviceability because it takes almost 3 weeks to be sent the material through ship, and whereas by road it takes only about 10 days. So there is a gap of about 10 days, 12 days on the delivery side. But other than that, direct cost really is not very big difference as of now.
Okay.
Rather, it may be advantages only if we send it through the ship as on date.
Okay. So cost-wise, there is no material difference as
Yeah.
such. Okay. And sir, just wanted to ask you on other expenses. This quarter, other expenses has seen a huge jump. Any line item that you would like to highlight?
No, not really. So as I mentioned, there were basically 2 things happening. One, in this period, there has been increase in the ocean trades because of the various uncertainties and our export also destination-wise. So that's one increase. 2, there are lots of repair maintenance going on in all the factories where we are trying to modernize those factories. So since lots of work has happened in the last 6 months, there's some increase on account of that. Other than that, I think it's all normal.
Okay. And so the last question is on the timeline of capacity that comes in the next 1 year. Could you help us understand which quarter we can expect some capacities coming in?
So on the spinning side, there is only one expansion which was announced on open end, but we are yet to start that project. We're still waiting for the government to give us a couple of approvals, and also we are evaluating the overall business circumstances. All modernization of spinning is going on as per the plan, and I expect most of the modernization will be completed by September, so it will be helping us both in terms of reduction of costs as well as some increase in the production on the existing setup only. The fabric expansion, Sagarika has already given the schedule. If you want again, Sagarika, can you just repeat when the fabric expansions are coming in for the various products?
Yes, sure. So our fabric capacity expansion should be operational by Q3. So we would be able to see an impact then.
Okay, but we had 2 capacities. One is existing product and one was synthetic fabric
Yes.
coming in.
So both. So this answer is for both.
Okay, for both it will be coming in third quarter. Okay.
Yes.
And it will be coming in full or in phases?
So the one from or the expansion of the existing capacity would come in full, and as per synthetics, so we have 2 phases. So phase 1 is 15 lakh meters per month. That would be coming now, and then basis how quickly we are able to establish our product and our brand name in the segment, we will expand according to that.
Understood. Thank you, Sagarika, and thank you, sir. Welcome back to the question queue.
Thank you. The next question is from the line of Resham Jain from DSP Asset Managers. Please proceed.
Yeah, hi, good evening. So I have 2-3 questions and clarification as well. So last time you mentioned you are currently incurring almost capex plus opex because modernization is also there, close to 3,000 odd crores. And if I'm not wrong, the yarn and fabric modernization and the yarn modernization is almost like 900 crore and 330 crores. Is that number correct? Almost 1,200 crores of modernization related capex.
Yeah, that's true.
And almost all of this 1,200 odd crores will be routed through P&L, because you mentioned some while back that some of this repair and maintenance and modernization related work is a part of other expenses.
No, sorry. So whatever is repair maintenance which is required as a building repair and those things, that goes as a P&L expense. All new machinery, because major expenditure in this will be the machinery. So all that machinery is capitalized, whereas the earlier machine will be written off or will be sold, and whatever is the difference in the net present in the depreciated value of those machines or sale price, that can come to P&L, be it in form of a profit or a loss. So all new machinery will be capitalized. It's only the repair, maintenance, etc., building repairs will go to the P&L.
So this 1,200 crore is the capitalization related number. The P&L related number is separate.
No, the P&L, no, this includes the P&L number, but the P&L will be only 30, 40, 50 crores, not more than that.
Understood. Okay, clear. So for the full year FY25, the incremental repair and maintenance, so if I look at your trend of repair and maintenance as a percentage of sales, this number would have gone up by what number on an average this year, FY25 as a whole?
0.5%.
Will it be 100 crores on a full year basis?
No. The over and above the normal repair maintenance, it won't be more than 0.5%.
Okay. 50 odd crores. Got it.
Yeah.
And the second question is, with all these measures, like you will have renewable energy coming in, modernization happening, some of the new machineries will also, whatever new capex you are doing are all automated machines. So I presume this all will lead to slightly better margins than our historical trends. And these are all internal measures which we have taken. So how much, on an aggregate basis, how much improvement do you expect because of all the internal improvement measures you have undertaken over the next 1 or 2 years?
You see, this has, if you look at the nature of these expenditures, one is a couple of things are done to ensure the proper quality of the products, which may or may not give you any direct advantages. Two, some of the machinery we are replacing because saving in the electricity cost or saving in the number of people. Over there would be an advantage for sure on account of the same. So third is creating more flexibility in the system so that we can produce the differentiated products which sometimes on the existing infrastructure may not be done. So depending upon how much those products we are in a position to sell or that kind of business is fetched into the India or buyers, the advantage would come in. But in any case, whatever expenditure we do, our expectation is always on the capex, at least 15% margin EBITDA should come, at least 15% should come over and above the existing costs.
Understood. Okay. The second question is with respect to the technical textile business. So obviously our project will get completed in third quarter, as I understood. But from the business development perspective, where are we, and what kind of inquiries and what kind of customers we are seeing in the technical textile business?
Yes, I can answer that. So currently we've received good response from our existing customers. So our existing customers in their portfolio also have these synthetic products. For example, they'll have a jacket which will be
registered with the government for that, which most of the companies sitting outside Chinese, Taiwanese, they are not doing it. If they are not getting themselves registered to the Indian authorities, in that scenario, that import cannot be done in India. So practically, the import of all fibers, they
As there is no response from the current participant, we may move to the next participant. The next question is from the line of Falguni Datta from Mansarovar Financial. You may proceed.
Yeah, good evening, sir. So how are the cotton yarn spreads now versus Q4?
So Q4 was for the Indian mills about 68-70 US cents, and it continues. So even if our feeling is, even if the tariffs are on, and if India gets the lowest tariff, there could be some indirect advantage to India that we will be more competitive.
And sir, currently it is 10%, right?
It is 10% as of now for everyone.
Okay. And sir, as of now, how is it like? Is it being passed on to the customers there, or how is it? It's being absorbed by the suppliers?
Yeah, as of now, it is being taken by the brand itself, but though they have started requesting a part of that to be borne by the fabric producers or the spinners, but spinner as of now is clearly said not possible looking at their margin. So they are requesting the fabric business also, so we haven't agreed as of now on anything, but yes, that request is there. So let's see how things goes.
Okay, so answer one final question. How do you see the spreads directionally for this year?
It all depends upon, because the government, the industry has already requested the government to waive the import duty on cotton. So I think if they are in a position to do that, our margins or spread would improve. But in case they don't do that, in that scenario, CCI will continue to be the sole supplier of cotton. And if our cotton is on almost 1,500, 1,600 basis on, then I don't think spreads improving for spinning industry even next year also. So unless we have our raw material aligned to the international markets, it looks a little difficult that margins could improve. Open to the not so good quality of cotton.
Understood. Clear. The second question, sir, is with respect to the overall capex which you have undertaken, and assuming all this capex get consummated, what will be the peak revenue at the current price which you are looking at?
So on the spinning side, as I mentioned, it's only modernization, and about 3-5% of production increase may happen because of the modernization. So that's not likely to give any top line increase. On the fabric side, Sagarika, बता सकते हैं कितना आपका top line increase हो सकती है?
On fabric side, given keeping the prices constant, we can expect a revenue increase in FY26 by 10%. And the year after that, we can expect about 30%.
Okay, what is that absolute number, ma'am?
So absolute number on the fabric side, it's about 4,000 crore turnover they have. So 10%, that means about 500 crores for the year. And the year after that, maybe about 1,000 crores or so.
The total 1,500 odd crores of top line increase. Okay.
In 2 years' time. In 2 years' time.
In 2 years' time. Yeah. Perfect. Thank you.
Thank you. The next question is from the line of Manish Gotke from HDFC Mutual Funds. You may proceed.
Yeah, thank you for the opportunity. So the kind of tariffs which US has put on China and Vietnam, and given the fact that India might be entering into an FTA with US as well as EU by year end, I mean, have we given any thought to enter into garmenting space?
So again, there are two ways of looking at it, whether the advantage will come only to the garmenter, or if India starts exporting garments to these countries, then whatever textile we are producing, that will be supplied to the Indian garmenters. So our major business as of now is the textile material, and we want to continue to be a stronger player in that. So we have a small shirting division which we are expanding also, but I think there is still no clear-cut decision to expand garment division in a big way. I think if India becomes competitive, definitely that advantage would come to as a textile suppliers. We directly want to do garmenting or we want to really increase it to 10 times, that's not a decision as of now.
Okay. And sir, another question. You said that MMF fabric in India, MMF raw material in India is approximately 20% expensive than China. So the MMF fabric which we will be making, are we catering to domestic demand? End domestic user demand, or is it to the export demand?
It will be a mix of both. So initially we could start with more domestic market, and then as we establish our product, then we will move to both domestic and export. And it will be difficult right now to commit that how much percentage will be domestic and how much will be export. I think we can say that once we actually start the production and build up.
Okay, thank you.
Thank you. The next question is from the line of Rajesh Jain from RK Capital. You may proceed.
You mentioned that your more than 50% of revenue comes from Bangladesh, and the tariffs on Bangladesh are on the higher side compared to India. But you mentioned that India stands to gain because of comparatively lower tariffs. But in particular, how will Vardhman gain? Because Vardhman supplies mainly to Bangladesh. Are you seeing any negative impact on demand from Bangladesh buyers, or how do you see the situation unfolding?
Going by today's consideration, China will be the most expensive in terms of the duties, etc. China has a huge export to USA. In case China is not competitive, that business will go to all other countries, which will include Vietnam, which will include Bangladesh, which will include Pakistan or India, or many others. So to that extent, till the time all other countries have this pie where they'll be getting a share from China, every country may have some advantage. And in any case, wherever we are exporting to these countries, other than China, I think that advantage can be shared between the various suppliers because of the duty advantage. So it's only whatever business which will be derived or which will be shifted from China going to any country, that country is going to get advantage only, including Bangladesh.
So, but I'm still not able to get one part of it. So you are supplying yarn to Bangladesh, right? And Bangladesh is going to be impacted, right? So just help me understand that how will you stand to gain in this scenario?
Because once China is out of the system, ultimately the business coming to Bangladesh, they will be in a position to enhance their prices of garment because they will be replacing China. So even if whatever we are supplying to them, we should also be in a position to enhance our prices.
Okay. Sir, on the fabric side, you mentioned that we can expect 10% revenue increase in FY26 to around 4,500 CR and to around 5,500 CR in FY27, right?
Yeah.
So and on this increased revenue with the new capacity, how much margin expansion do you anticipate? How many bits or percentage?
Sorry, I just correct you. So currently about 35% of our revenue is fabric. So from that there will be an increase of 10%. And in this financial year, and as for margins, I think again it would depend on how the US tariff war plays out. So very difficult to say. I think we should wait for the dust to settle down, where we will find the relative advantage and disadvantage and what different brand strategies will be, and then we can let you know what the margin we can expect.
But on a very ballpark number, can we expect 1-2 percentage point gains on the fabric side, or even that is tough?
I think it depends on the strategies that brands take.
Okay. All right, fine. Yeah, thank you.
Ladies and gentlemen, before we take the next question, I would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Lakshmi Narayan from Tunga Investments. You may proceed.
Yeah, I have one question. If you look at the entire continuum of cotton producers, yarn producers, fabric makers, and garmenters, right? So current situation is benefits whom in a relative sense and will be the world affected.
Yeah, your voice was not clear. Can you repeat your question?
So my question is that if you look at the entire continuum from the cotton producers to the yarn producers to the fabric makers and garmenters, on a basis, who will benefit the most in this challenging phase, and who will actually benefit the most, and who will actually suffer the best?
All uncertainty as of now, it is very difficult to comment what duties will be there on us, what duties will be there on the other countries. My only belief is if the country as a whole will gain, then the entire supply chain will get advantage of that. How much who is going to get will depend upon your own decision and other things, but if as a country we have the advantage of a lower duty, that advantage comes to the garment, and part of that will be going to the fabric region, part of that may go to the yarn region also. So this will be shared at a later stage, provided that gain comes to us. Who is going to get what? It's very difficult in this scenario. We don't know how much duty differential will have, how the capacity the garmenters will be in a position to take advantage of that. So it'll be totally theoretical if we try to make a model that this is a duty advantage and who is going to get what. Not possible to put in any numbers as of now.
Thank you, sir.
In the interest of time, that was the last question. I would now like to hand the conference over to the management for closing comments. Thank you, and over to the management.
So thank you very much for